Welcome back, ladies and gentlemen, delegates, and others. Welcome back to the second quarter, to use the football vernacular. Clean energy and decarbonisation in mining is the topic of Christopher Mackenzie from Gilbert and Tobin's presentation. Gilbert and Tobin are the leading legal advisors in mining, corporate law, and the energy and resources sector. Their clean energy and decarbonisation team includes experts in energy and resources, infrastructure and projects, banking, competition, environment, corporate advisory, technology, and regulatory. The team is committed to assisting clients navigate the complex and evolving world of clean energy projects and the transition to a lower emissions economy. Special counsel is Christopher Mackenzie. He joins us now. Christopher.
Thank you for the introduction. It's my pleasure to speak to you today on this topic. At present, more than 130 nations, as well as businesses operating in every sector, have set a net zero commitment. However, the latest IPCC report found that the Earth is likely to warm by 1.5 degrees by 2030. And following COP26, the broad scientific consensus is that the world is on a warming trajectory of at least 2.4 degrees by 2050. The world now embarks on a global energy transition that will cost in excess of $10 trillion. So why is this relevant to mining? McKinsey has found that mining is currently responsible for 4 to 7% of greenhouse gas emissions globally, with a significant share, approximately 28%, comprising Scope 3 emissions. Somewhat ironically, recent comments from the chair of Tesla appear to highlight the opportunity for every mining company in this room. She noted, each electric vehicle contains an estimated $5,000 worth of minerals. And Australia is the only country in the world with resources in all three of the critical battery metals, as well as other mining minerals required for the clean energy transition. In 2021, we now see that the private sector is setting aggressive decarbonisation targets in order to obtain finance, retain and remain relevant to shareholders, and operate with a social conscience and licence. What this means is that change is and will continue to be driven by industry. Here are the decarbonisation themes from the mining industry that we have identified in the work that we've been doing at Gilbert and Tobin in 2021. Since the beginning of the year, and recently culminating in the outcomes of COP26, global pressures from trade partners, investors, community, and regulators have accelerated the shift towards a zero carbon economy. It's clear that the urgent need to reverse the impact of climate change has forced every industry across the globe to transition. This paradigm shift, which in the mining industry began in early 2021, when Fortescue brought forward its net zero commitment by 10 years to 2030, has now become the convention. There is now widespread recognition that the need to decarbonise has a high impact on attracting capital, delivering investor returns, continuing future growth, and maintaining a social licence to operate. But ambitious targets are nothing without a corresponding credible and sustainable plan to achieve it. As a result, clean energy and decarbonisation is now transforming mining. Net zero commitments are the new normal for leading companies. By way of example, all of these companies, in addition to others such as Vale and Anglo American, have effectively set net zero by 2050 targets. Whilst the pathways differ, and emissions reductions vary in timescale and level of investment, emissions reduction in mining is now underway. And due to the lead time of major projects, plans for carbon neutrality must be reflected in the capital investment decisions to be made in the next 1 to 5 years, as they will result in the mines of the future taking shape by the end of this decade. For other mining companies, climate change is inspiring a new purpose in mining. The messages being delivered are no longer about extracting product and sending it on a ship, which is obviously core, but the forward thinkers are believing in a green energy future, pushing boundaries to make life better, producing clean energy for a better tomorrow, believing in the power of people and its collective capacity to decarbonise the world. In this regard, 2021 also saw the emergence of a new term about the risk of paying lip service to decarbonisation and net zero goals. Sometimes referred to as greenwashing, talk without action will only lead to allegations of greenwashing. In this way, the company's reputation will hinge on its actions to eliminate, reduce, and mitigate emissions. Doing that will require a strategy across all aspects of the business and value chain. To deliver on decarbonisation, a credible strategy must be integrated in both strategic and operational decision-making. Not only does it need to comprise a clear plan to eliminate, reduce, or mitigate, corporate climate change policy must permeate every aspect of the organisation, including having a sharp focus on supply chains, corporate governance and risk management frameworks, and an emphasis on the role of human capital who will implement the radical changes to reduce emissions in mining. And with the advent of green financing, the focus will become more embedded further, where funding and the cost of such funding will also be linked to those outcomes. When looking at the emissions profile of a mining company, the key challenges are consistently centred on investment in renewable power generation, supported by battery technology to replace existing diesel and gas-fired stations. Advancements in wind and solar technology over the last decade mean that renewables are now the cheapest form of energy generation, cheaper than coal and gas. Having said this, batteries are still comparatively expensive, and the challenge is one of scale, deploying large solutions year on year to drive down costs further. Fortescue talks about its plans to rolling out renewable projects, just like meeting its annualised iron ore production targets. And Rio Tinto has just committed $2 billion to power its Pilbara operations with renewables. The other main aspect is about reducing reliance on diesel fuel by replacing diesel engines in trains, ships, and heavy mining equipment with a zero carbon option. Whilst the jury is still out on the technology to replace diesel in the ultra-heavy fleet space, companies like BHP and Rio are optimising mine design for in-pit crushing and reduced haul distances to enable electrified fleet. However, heavy fleet may well be the perfect use case for green hydrogen, as currently being trialled by Fortescue. Much like the planes of the future will not be powered on batteries, that may be the same for these heavy fleet. We're also seeing innovation in hybrid off-grid power systems to power exploration drilling rigs, in addition to hydrogen-powered ones that Fortescue is also trialling. The point to be made is that the technologies which are now being proven at scale will be core to the mines of the future. Increasingly, we're seeing global demand for supply chain sustainability. Mining companies face a challenge to both improve their understanding of supply chain emissions beyond Scope 1 and Scope 2, and to work with end users to reduce these Scope 3 emissions. For companies like FFI, there are innovative solutions to this. They intend to supply over 15 million tonnes of green hydrogen annually by 2030. As it predicts, renewable hydrogen will become the most globally traded seaborne energy commodity in the world. But this is unlikely to be the silver bullet for the mere miners out there. All of these proposed reforms and market conditions that are demanding transparency and accountability within supply chain, such as the so-called carbon border adjustment mechanisms, certification of origin schemes, the EU RED II, as well as carbon tariffs, will impact primary producers like Australia enormously this decade. It will be imperative for miners of the future to respond to the demand of global consumers for supply chain sustainability. It may be the difference between retaining customers or being a diminishing supplier in a global marketplace. In 2021, the combination of market leadership and market pressure has led to a deluge of corporate commitments to net zero by 2050. By our last count, almost 70% or 34 of the top 50 ASX listed companies have made a net zero commitment. Against this backdrop, the ASX and ASIC have endorsed a TCFD framework for assessing, managing and disclosing climate change risks. This framework guides mining companies to assess such things as the implications of changes to the diesel fuel tax credit or pass-through costs from suppliers. Often we're seeing the tax credit being removed from cash flow models and internal carbon price being applied in the evaluation of climate-related risks and opportunities. Other risks being assessed are the potential for changes to law or policy, such as the introduction of a carbon price, environmental license conditions, or stricter water regulations which may destroy the economics of a mine plan. The TCFD also recommends scenario planning that focuses on the resilience of an organisation's strategy in different climatic scenarios. That is, are the mining operations aligned to the best case and worst case climate pathway? Not only is an assessment of the risk of mining in a 2.4 degree world required, that same assessment is required of mining in a 3 to 4 degree world. That is all of the mining we do today possible in a hothouse planet that is characterised by more extreme weather events and the chronic impacts of increased temperatures? Rather dauntingly, the answer to these questions does not always appear to be yes. Because the answers to these questions may soon be critical to a FID for a mine of the future, it is never too early to consider these matters in mine planning, development, or acquisition strategies. It is now the message of our corporate regulator that net zero commitments fit squarely within the existing framework, which requires forward-looking statements that have a reasonable basis. In our review of the top 50 ASX listed companies which made net zero commitments, 32% make commitments to an as yet unidentified technology, and in all but 7 cases, offsets are required to achieve those commitments. The questions that will be asked of boards is whether they've turned their minds to the questions of whether the new technologies can be applied to existing operations to reduce emissions in a cost-effective way, or whether a future market for offsets will exist, and if so, whether such offsets are able to be purchased on financially attractive terms. Whilst boards need to apply appropriate due diligence and risk management frameworks to those questions, these are not easy to answer. The final element of a credible carbon neutral strategy is the recognition that carbon neutrality turns on people redesigning how businesses and economies operate. Ultimately, decarbonisation is about the empowerment of people to drive the change that is required. Mining companies, like all mining companies, are realising that unless their approach on climate change is a direct reflection of the corporate values and culture and the communities in which they operate, their ability to attract and retain the most talented people will be diminished. The challenge for the mining industry is enormous, but it exists now, and its people, all of us, will need to respond. If I can end with this final slide, recent modelling by Deloitte found that strong climate action will drive economic growth and deliver 47 trillion to the Asia-Pacific economies by 2070, whereas climate inaction could cost 96 trillion due to the focus of productive capital and knowledge on repairing climate damage. The clean energy transition holds great opportunity and promise. We all stand to gain significantly. The decisions to be made by businesses to ensuring a better future are no longer just a matter of good conscience. They're a matter of social license to operate, legal responsibility, and remaining relevant. This is the decade to deliver. Thank you.
Thus speaketh Christopher McKenzie. Chris Evans is Managing Director of Winsome Resources, a Canadian-focused hard rock lithium explorer, which listed on the ASX yesterday after successfully completing a well oversubscribed IPO. Chris is a civil engineer with over 20 years of project and mine development, as well as ASX corporate management experience spanning a number of commodities, both Australia and international. Welcome along, Chris.
Thank you for the kind introduction, and good morning, everyone. Thank you for your time today. Excuse me, while I talk about Winsome Resources and our hard rock lithium assets in Quebec in Canada. Please be aware there's some forward-looking statements here. I added this slide just last night because we were extremely pleased yesterday to list on the ASX after a very heavily subscribed IPO. A spin-out process from previously owned ASX assets. Over a period of about 6 months, we aimed to raise between 12 and 18 million dollars, and we were offered quadruple that at least. So it's really encouraging to see that, and it's a great platform upon which to present at this conference today. We closed yesterday at about 26 cents, and I think we're up to about 31 cents today. So thank you to the vertical events team as well, to Stuart and Jackson for organising this. I think it's fantastic for us all to be able to get back together, meet investors face to face, and really talk about all of our projects. Like most of presentations like mine, there's quite a bit of technical information about the company in here today, but really I'd like you to take away 3 things out of this presentation, if nothing else. And those 3 things are that we have the right commodity in the right jurisdiction and we've gathered the right team together. And I'll take a quick moment to talk about that, because those 3 things are really what encapsulates Winsome Resources as a company. By right commodity, of course, lithium. Many of you know about lithium. It's there's barely a hotter commodity on the market at the moment, but ours is a little bit different, and it's the quality of the lithium. So we have hard rock tenements, which are relatively easy to get into production as compared to a brine. They're relatively low capex and quicker to bring into production as well. And of course, generally have a lower ESG footprint. And ours as well is a very high grade. We've got 3.7% lithium oxide at our Cansett project from the surface up down for an intersection of 17 metres. So we've got the right commodity, but the right type of that commodity as well. The right jurisdiction, I find it hard to think of a better jurisdiction in which to be establishing a lithium project at the moment than Quebec. The government's extremely supportive. We're well serviced by infrastructure. We get about 40% of our exploration expenditure back from the government, and most of the power is hydroelectric in the province. And by right team, I think you'll find with the team we've pulled together at Winsome Resources, it's a pretty rare blend of lithium market experience and small cap exploration leadership. In the tight market we're operating in at the moment, the shareholders can rely on the fact you really have the right team in place to maximise return on the fantastic resources we have at our disposal. Actually, I'll go back a sec. The table on the right is a little bit incomplete at the moment, so we don't have any trading history. But we've got about 142 million shares on issue, and we took the full $18 million, which is now in our bank account. I've got a couple of slides here on global market lithium trends. It's probably going to be covered or has been covered already by numerous other presentations. There's a couple of things I will outline though that are particular to North America and Canada. The first one is that lithium and tantalum, both of which occur in high grades in our projects, are both on the critical minerals list for the US and Canada. Spodumene concentrate, which we'll aim to make from our hard rock projects, is the feedstock, lithium feedstock of choice for lithium-ion batteries in North America. Now, North America is developing its own battery and battery materials supply chain in a desperate hurry in order to break the traditional dominances and supply chains around the world. And I was over there recently myself, and I saw the fact that range anxiety plays a real part in the US psyche when it comes to electric vehicles. So range anxiety means they want longer ranges out of their EVs typically, much like we do in Australia. This means higher energy density batteries, which requires high nickel chemistry. And for that, you need lithium hydroxide. And the best and the cheapest feedstock is hard rock 6% spodumene concentrate for that. And the other interesting fact from this slide, which was put out by the World Economic Forum earlier this year, it's probably the central figure you can see there, shows that 99% of the world's lithium reserves as of 2021 lie in Australia, China, Chile, and Argentina. And again, the US is trying to break that traditional quadropoly that exists, and we're going to play a big part in that. Well, actually, I shouldn't say a big part. We're going to play a part in that in North America and Canada, growing their reserves. And I like this one just because the Canadian government put it out. It's a pretty neat way of representing their critical minerals on the right-hand side in the shape of a maple leaf. As I said before, both lithium and tantalum are on there. For the investment highlights, before I go into detail about the company and our projects, really are that we have hard rock lithium, 3 hard rock lithium assets in Quebec. Quebec's a fantastic jurisdiction, as I've already mentioned. We get 40% of our exploration expenditure back from the government in the form of tax credits. 99% of all power in Quebec is generated by hydroelectricity, the lines of which pass directly through our tenements and which we can harness relatively easily. I think that'll become particularly important with the greenhouse gas footprint of batteries becoming prominent and having to be labelled on the batteries, particularly in Europe from about 2024 onwards. We've got fantastic grades. At Canset in particular, 3.7% lithium oxide. We saw grades of up to 4% for short intervals. And at Adina, grades above 2% in the drilling we've done. Canset has already had 5,500 odd metres of drilling done on it, and it's extremely coarse-grained spodumene, which means it makes it very amenable to heavy liquid separation and therefore dense media separation ultimately when we process it. That test work's been done to prove this already. And I think the last one is that we've got two cornerstone investors in our IPO. One is the Lithium Royalty Corporation. They took 10% of the money available, the shares available in our IPO. They're a North American-based lithium investor and royalty company. They've got a couple of percent royalty over some of our claims in Quebec. They're a big promoter of ours in North America. And it really bodes well having them on our registry. But they have royalties over Galaxy, Core Lithium, and the recent Moblin acquisition by Sayona Mining. And the other cornerstone investor we have is Jushi Group. They took a reasonable but a smallish share in our company. And they are listed on the Hong Kong Exchange, but they have a fiberglass manufacturing facility in North America. And for the manufacture of fiberglass, you require high-grade, high-quality 6% spodumene concentrate. So if they ever became an offtake partner, it would bypass the need for conversion. So we have three projects in the James Bay region of Quebec: Canset, Cermak, Clapia, and Adina, as I've already said. Canset's the flagship, the most advanced, with 5,500 metres of drilling already done. Really, the way to think of these three projects is that they're one drilling season behind each other. As I said, Canset the most advanced. Sitting behind that is Adina, that's had about 1,700 metres of diamond drilling. And then Cermak is the least advanced, but it's highly prospective. It sits immediately adjacent to a resource already established by Nemaska Lithium a couple of years ago. And again, when I was in Quebec, maybe 8 weeks ago, you can walk directly from Cermak onto the drilling area where the pegmatites from the adjacent resource are. Looks like it goes under our ground. It's one of the exciting things about exploration. We'll soon find out when we launch into our exploration program. There's good infrastructure servicing all of our claims, major highways going straight past Canset, hydroelectricity lines going right through our claims, and the road that was just highlighted, you can see hopefully in the orange there, that shows Canset down to what's the, now I suppose it's known as the Sayona Lithium Hub, where they have their Ortier mine, and they also have the old North American Lithium, which they recently acquired. Galaxy's James Bay, it's now Orocobre's James Bay, is sitting about 250 kilometres from Canset. Cermak, which are our least advanced project, is only 30 kilometres from the Moblin project, which I'll talk about in a moment, was recently acquired by Sayona. And then there's the Nemaska project and Critical Elements Rose Lithium as well in the vicinity. So what this all means is we believe that within the next 5 years, there's going to be one, if not two or three conversion facilities built in the reasonably close proximity of our projects. We know Piedmont Lithium's pushing for it. We know the Quebec government is pushing for it. So we think that conversion is going to, the conversion question from our spodumene concentrate will largely answer itself over the next few years as we develop the project. Now, the Moblin project you can see there is a really interesting case study in comparison to us as a peer. It's got a resource of about 12 million tonnes at 1.4% lithium oxide. And to establish that resource, they had 17,000 metres of diamond drilling. Now, as I mentioned before, at Canset, we've got about 5,500 metres of diamond drilling. They were required for, Sayona purchased them 60% of their project for $86 million, which values them roughly at $144 million for the full project. That's US, roughly 200 million Australian. The fact that we listed with an EV of $9 million yesterday, and our market cap today is sitting at about $38 million, shows the real potential for our project. As I mentioned before, I recently visited Canada, spent a few weeks in Quebec and visited our sites. And hopefully this picture, for those of you who know something about lithium, hopefully you can see the green spodumene crystals in all three of those photos. I've visited perhaps half a dozen hard rock lithium mines around the world, and these are the largest spodumene crystals I've ever come across. And they correspond, given our previous met test work, to this, this really easily convertible and ultimate 6% product that we produced in the lab. And unsurprisingly, that's right at the spot where we got 3.7% lithium oxide. It's a fantastic deposit. It's outcropping on the surface. As you'll see in a moment, there's a whole lot more to be seen from Canset. So I'll largely skip over this. This shows the modelling that we've done. So that 5,500 metres of drilling has led to good modelling. The green is 1% lithium oxide, between 1 and 2, and the purple areas are over 2% lithium oxide. So you can see we've got two main pegmatite dikes essentially lying fairly flat next to one another, and we've got a whole lot more to find around Canset. If I refer you to the inset first, the colourful inset, that shows the magnetic flyover we've had done at Canset, and then the little dots are the drilling that we've done. So you can see that the pink seems to correspond to pegmatite anomalies, and we've drilled all along that to get those previous models that I showed in the last slide. The magnetic flyover was done over about a dozen of our claims, which you can see in the larger bottom right-hand picture. And we've got 395 claims in total at Canset. So our first job is to compile all the data we have, obviously fly more magnetic geophysical surveys over the entire 395 claims, identify those similar anomalies and continue drilling. There's again a bit of perspective. What we've looked at and drilled and surveyed at the moment, and we've got all the remainder of those claims you can see. I talked about the team previously. I'll briefly brush over us. I've got about 6 years of lithium experience, as has Dr. Qingtao Zheng, who has traded lithium between Australia and China. Justin Boylston has a great deal of leadership in small cap exploration companies. And Peter Yu sits on the board of other ASX listed companies and likewise has a lot of leadership experience and ASX compliance experience. So from here, we are going to begin 18 months to 2 years of intensive exploration work over all 3 of our projects. Canset being the first one and perhaps the most obvious because there's already significant data on the area and we know where to look. So at Canset, it's going to be a case of infill drilling where it has already been drilled, extension drilling of that immediate area, and then looking across the rest of the claims. We intend to develop a resource at Canset within 18 months and correspond that with a scoping study. And given that we've got $18 million in the bank and there's a lot of opportunities in Quebec, we've got our eye out for other potential projects in the area, of which there are quite a few. I referred to Moblon before. This is an interesting peer comparison of several companies who have recently listed with similar assets to us. And you can see our EV and our market cap is well below what they are, even after within a short time of listing. Shows the real potential that Winsome Resources has. As I said at the beginning, 3 points I'd like you to take away from this is right commodity, right jurisdiction, and right team. We've got a booth out the back. If anyone has any questions, please feel free to come over, talk to myself and all the other directors, and our COSEC is here today. We'd love to talk to you. Thank you.
stage, let me tell you that Tietto Minerals Abuja gold project is on track to be West Africa's next gold mine. Mark joins us with the Tietto story.
Thanks everyone for making some time today. Oops, I'll just run back through. So there we are, West Africa's next gold mine. That's the target. It's a very simple story. We'll walk you through it. Obviously some forward-looking statements, and we'll just get through to the next slide there. You're getting onto the story at a very interesting time. We've been able to get the funding, so we're funded through to production. We've just recently announced an equity capital raise there for 85 million. It'll be done in first tranche is in, second tranche will be in just about the middle of January. We've signed up with Taurus, who are very experienced in delivering debt finance for companies like ourselves into West Africa. That was announced. We also announced a DFS on the 5th of October. So you can see from 5th of October to 22nd of November, we've been busy and we've taken a huge amount of risk out, and we've got line of sight on building this project. We've got a growing resource, and I'll talk about how we're going to try and improve on that and continue to grow it. We've also, importantly, been able to secure, we think, probably West Africa's best build team. We've got Matt Wilcox and co. That had just come out of Sanbrado, did a fantastic job for Richard Hyde. And one of the big differentiators with Tietto is we run our own diamond drill rigs. We can drill at about 100,000 meters a year, and we've got a lot of acreage, and we think there's a lot of opportunity for growth. The other aspect, just recently, and obviously we get asked all the time, what's your social license to operate? We've got a very strong Ivorian management team. We've got two of our local partners are actually holders in the stock as well. And we also have all of our geological team own shares. But importantly, it's also about training the next round of geoscientists, and we recently signed with the University of Man an opportunity for 3 masters graduates every year to come get some training, work with us, and data exchange. So this just provides you a little bit of a snapshot on where we are. Look, the 684 will be post issue and sorting out that tranche 2 in January. I think the real key for me is the enterprise value. When you look at where we're currently sitting, and when I talk about the project and the value that's on offer here, there's an incredible amount of uplift, and that's what it's all about. Is how can we generate value for shareholders? We're very, very focused on that. Very happy to be able to announce T. Rowe Price and Jowgen Mining just recently coming on the books as well. So a good round of support there. In terms of just some of the key snapshots, of very strong gold production. You look at there, the first year, 260,000 ounces at, was it just under 651, 6 years at 804 for 200,000 ounces. And I'll show you a little slide just on how we're able to do that. Open pit mining reserves are up to 1.45 million ounces. We've got a life of mine plan, including some inferred, of 1.7 for about just over 10 plus 1 or 11 years. And we think there's an incredible amount of opportunity to be able to increase and grow that. Strip ratios, it's simple open cut mining. So it's relatively straightforward. Many have done this before us. In terms of some of the key aspects there, you can see, and that was really the key there. When you look at the NPV of the project, we're currently 88% owner of that. The government holds 10%, which is typical in West Africa, and our 2 local partners holding 1% each. CapEx, 200 million US, including contingencies. That CapEx includes tendered costs from mining contractors operating in Côte d'Ivoire and West Africa, and also on the build side, we've actually got, we purchased our own mill that's been refurbed. We've also completed tender packages for equipment. So these are real-time numbers, very well understood. And importantly, we've got the funding in place there. We've got that equity component. We're working on spending that now, and we're working through the technical DD with Taurus. So we're on the way, and we're targeting gold in 22. So I'll talk about that. So a little animation, look, it's running off there. So importantly, the mining strategy is mine the high grades first. That's the red area you can see. Mining faster than the mill. So we're bringing high grades forward, putting lower grades on a stockpile. And where possible, you would have seen there that we're leaving waste behind if possible. So we've got a stage cutback strategy. It's very, very conventional open pit mining. That's a little just showing you that gold production unashamedly front-ended. So the first 6 years, very strong, that 200,000 ounce. You can see the dark red showing the indicated mineralization that makes up that ore reserve. We've had very good success at converting the pink colors, which are inferred material, into indicated. From year 7 onward, we see a lot of opportunity to be able to increase that gold production to that 200,000 target. That's those little red triangles. And that's coming from regional exploration, from potentially we do see the opportunity for underground at the later stages, and also just simple extension along strike. Recently released some results on that as well. Just to give you a bit of a feel for where the production sits in the project, definitely sitting in the top 20 there. You can see just over, got the obviously Sanbrado, that was built by Matt and the team, have been incredible success for shareholders of West African. So it's looking at 280,000 ounces. So our first year at 260,000, and that 1 to 6, 200,000 ounces. So yeah, that's the key now, is get that built, and that's what we're running ahead on. So very, very simple project. We've got some fantastic metallurgical properties, very high recoveries from gold. Gold's the cheapest form of gold of recovery you can have. The ore is very soft, including the fresh ore. It's between 10 to 20 bond ball index. To give you some context, typical West African ores can range from 19 to 21, 22 kilowatt hours. That's a measure of how much energy you need. So obviously the less energy, the less it's going to cost. Got access to very cheap grid power at Deloa. We're building a 32-kilometre power line to access a 90 kilovolt ring main feeder. Power in Côte d'Ivoire is very cheap. It comes mainly from hydro. It's about 12 cents a kilowatt hour. To put that in perspective, if we were using an off-grid HFO, we'd be looking at between 25 cents a kilowatt hour. We have environmental, we have mining license. We're working through the mining convention. We're actually breaking ground, so we've cleared the area for the process plant. And Matt and his team, as I said, we've got the mill, detailed engineering is well advanced as well. So that's Matt. He hates me talking about him, but he and his team have got a fantastic track record. We're very, very happy to have him on board. Just freshly come from Sanbrado, which was ahead of schedule and under budget. Incredible success story. And as you can see there, he's done it before with the Russians, Nordgold, Bissa and Bully. One was a CIL, one was a heap leach. And he also built a heap leach plant in Siberia, which he said was the hardest job he's probably ever done. And I don't think he's too keen to go back. Got the team, the key people, Guillaume, Hesbon, Danny and Beatrice, and they're on site and working away, making sure that we can get this first gold out by the end of next year. Gold standard. Look, execution in West Africa has been exemplary compared to some of the examples that's happened here. And I think you're held to a higher standard. And what we're showing there as well, we borrowed this from Orezone, but 3 projects in bold, you can see. It's been built by Matt and the team. They're working for us. So we're very, very happy to have them on board. And hopefully we can do that as well. In terms of the opportunity to grow resources, we've got 3.35 million ounces. We see a lot of opportunity to be able to build on that. We've got a great land package, which I'll show you for the regional exploration. We're also taking further risk out. We're doing some drilling on converting indicated to measured. Also looking at that underground potential with these large systems. They tend to be open and we've got the wherewithal. One of the keys there is that we can drill 100,000 metres a year. That's one of our 6 diamond drill rigs. As you can see, they've got a very low footprint. So for regional exploration, you don't need to have dozers. You've got very minimal land clearing. So it gives us, we believe, an incredible advantage compared to our peers. The average cost is about $35 US a metre. Put that in context, you'd be normally looking between $150 to $200 to $300 a metre. So just some of the regional, this is our resources. The DFS was based on the model that was updated in July. As you can see, we've been moving at an incredible clip since listing in 2018. We've been able to de-risk taking that indicated up to 1.85. You can see the bolder colours. The site geologists, they think next year, hopefully there'll be a 4 in there. Got a bit of work to do, so let's see where we end up. So that's some of the results from the infill program. We're looking at taking that resource model. The indicator was based on 50 metres down to 25, covering the first 2 years of production, so further de-risking, and that covers about 120 metres vertical. You can see some absolute cracking grades there. So as we've been going, it looks like it's doing exactly what it should do. Underground opportunity, the DFS pit's 330 metres vertical, and you can see there they've taken a list of some of the drill intercepts. Definitely the right tenor for underground. Importantly, the system's open. We've drilled the deepest hole was 720 metres downhole, covering about 650. We're looking to try and put about 5,000 to 6,000 metres of drilling into that, and those drill results will be coming out into next year. So we've got some rigs working on that now. Regional exploration, probably a little bit hard to see on that little map. We've got 70k of strike. We own 100% of the tenement in the south, and we've at 55% there on the northern tenement. Importantly, right around the resource there, you can see the blue polygon. That's where the mining license is. Got 20 targets there. That we can see that we're currently testing at a range. Importantly, it's to have this pipeline. Not all of them are going to work, but we see a good opportunity. Ultimately, we're going to be busy for many, many years drilling away and growing resources. So that's the timetable. Finance, as we said, that's done. We're just working now through the DD with Taurus. The plant, we've purchased a mill. We've got steel for the power line. That's on water and due for delivery. So we're not very orthodox. We've run very, very hard. To give you some, recently we had a contractor that had been thinking that they could do some work for us, and they were just blown away by how quickly we're able to secure the funding package. Time is money, and it's very important that we are able to deliver on that plan. First gold, end of next year. Matt and the team are pushing very, very quickly. Detailed engineering's at around about 75%. Obviously, all the mechanical equipment, steel, that's all tendered, so we know the prices. Transport, logistics, that's locked away. So that's something to look forward to. Obviously, the resources, we're going to continue to grow that 100,000 metres every year, so lots and lots of news flow. So that's it, really. Very, very simple story. A lot of the risk's been taken out. You're really coming on board if you're not a shareholder already. It's a very, very exciting time. There's an incredible amount of value uplift that comes from having a gold mine. Is it a license to print money? Pretty close. So something to look forward to. So look, thank you very much for your attention today. Come by and have a chat. Thanks.
Thank you, Mark. Gold mine is a license to print money. The auditorium 2, the technical auditorium, is open if you'd now like to get involved with presentations hosted by Geoscience Australia. It's to your right as you go out this door. Kalamazoo Resources Ltd has an exciting portfolio of both gold and lithium projects in WA and Victoria. To tell us more about their current projects, we welcome Executive Director Paul Adams.
We'd just like to thank the organisers, Vertical Events, their assistants and their helpers, and of course all the sponsors for today's event. Today I'd like to take you through the highlights of the Kalamazoo story, which really is centred around our gold and lithium projects in Western Australia and our gold projects in Victoria. And that, of course, is the obligatory forward-looking statement slide. You can read that at your leisure. So we really want to start here at home in Western Australia, and more specifically in the Pilbara region, where we have projects prospective both for gold and lithium. Chiefly among these is our Ashburton Gold Project, a 1.65 million ounce resource located just 40 kilometres south of the township of Paraburdoo, and at the very southern margin, I guess, of that Pilbara province. We acquired the project from Northern Star about a year ago now, and have made significant headway through the drilling of 2 programs that we've just completed our second program, we're waiting still, I guess, like many other companies, for the last of the results to come through. We've made obviously some inroads into expanding the brownfields resources. along strike of some of our existing historic deposits, and also some greenfields opportunities too. And there are still many of those more to test. And the Ashburton Gold Project itself produced about 350,000 ounces between 1998 and 2004 through Tietto Resources. And Northern Star acquired the project in about 2010 and very quickly added about 1 million ounces to resources. And they were really looking at this project as their second development project to augment their Paulson's project, which was lying to the northwest, but still in the Ashburton province. We hope over the next couple of years that we can emulate some of that success and push that 1.65 million ounces towards 2 million ounces and beyond. More recently, Kalamazoo has recognised the lithium potential on some of its 100% owned East Pilbara projects, and we've already embarked on an extensive geochemical program to develop lithium targets in and around the Marble Bar region. In Victoria, Kalamazoo has amassed an excellent portfolio of gold projects in the Bendigo zone, initially with a pegging of both the Castlemaine and South Buckleford goldfields, and subsequent bolt-on acquisitions at strategic locations close to Kirkland Lake's Fosterville gold operations. And just look at a quick snapshot of where we are today. We've approximately 142 million shares on issue after yesterday's conversion of 25-cent options by directors and employees. That added a further $2 million to our treasury. So that now stands at circa $6 million plus some liquid assets in the form of Novo shares that we acquired as a result of a recent transaction. We've got a small board. We have 2 exploration managers, each looking after exploration in their respective states of WA and Victoria. Share registry has been pretty stable over the last few years, with the top 5 shareholders accounting for about 50% of the issued capital. Strategic investments in Kalamazoo came last year from a private placement of $8 million to Novo Resources and Eric Sprott, who approximately hold 7.5% each, after our initial program in Victoria that discovered some high-grade mineralisation that Quentin Henai viewed as being perhaps analogous to some of the mineralisation that they're seeing at Fosterville. And Novo and Eric have been very supportive shareholders over that time, and we're very fortunate to have them on our register. So turning our attention to more project-specific information, in WA, our project portfolio dominated, as I said, by the Ashburton Gold Project, 1.65 million ounces grading 2.5 grams per tonne. I think the project sets reasonably well with some of the peer projects in the Pilbara in gold, and that of course includes Calidus and Capricorn and Novo themselves. Elsewhere in the Pilbara project, our sisters project lies southwest of De Grey's Hemi discovery, and within the same structural corridor, so it sits right above that Waller shear zone. Has several well-defined gold and pathfinder element anomalies, and we hope to be in a position to drill that in the first half of next year. And lastly, in the East Pilbara, close to Marble Bar, lie our Doms Hill and Marble Bar projects. Whilst very prospective for gold, they're also recognised as being prospective for lithium, and I'll say something a bit later about that in the presentation. But turning back to the Ashburton, we believe there's significant scope for expansion of the current resource base, and our aim is to achieve that 2 million ounces over the next 1 or 2 years. Second drill campaign was only completed in September, and we were looking, I suppose, primarily for strike extensions of existing brownfields deposits, but also our first forays into some of these greenfield project areas within close proximity of these historical pits, which were actually mined for their oxide resource. So there are a number of targets we've not yet visited, let alone drilled. And as we spend more time on the ground, new targets continue to be discovered. As a result, we believe the project has much further potential, and we're initiating a large geophysical survey, which hopefully will be completed in the first half of next year to provide an additional layer of information that we don't currently have. In order to progress the sulfide portion of the resource, we've embarked on an extended metallurgical test work program That will hopefully be reaching its conclusion in the end of the first quarter next year. And that has been happening alongside several research-focused activities to develop a deeper understanding of the potential of the sulfide resource to generate significant value. The slide that you can see here presents the tenements of the Ashburton project, 7 tenements in all, 3 mining licenses and 4 exploration licenses. The geology, location of the major prospects there, and the existing resource base in each. But also it shows the sparseness of the drilling away from the main centres of past production. So we've got quite a lot of work to do to get to some of these prospects that are a little bit distal to the existing centres. So most of Kalamazoo's attention in the last 12 months has been concentrated in that sort of 3 to 4 kilometres from these existing centres. And obviously we intend to widen that search as we look forward to our 2022 programs. Early success was certainly seen in our first program, and that was centred around the War deposit. Some extensional down dip and down plunge drilling intersected some really nice widths and nice grades of gold, pretty typical of the War style of mineralisation in these quartz ironstone units. We've now extended mineralisation in that area over a strike length of about 2.5 kilometres along what we've now termed the War zone, for want of a better term. But perhaps more exciting in this location is the recognition of further anomalism in this characteristic siltstone unit that plays host to this type of mineralisation. And we've got 20 kilometres of strike of that going all the way around the margins of the Diligence Dome. Now, many of those anomalies are yet to be drilled or have only had very sparse drilling in them. So that's going to be an additional focus for us next year also. We had a program, as I say, recently completed. We discovered further shallow gold mineralisation at War West and early indications at Annie Oakley, where we found some gold mineralisation in shallow dipping conglomerates, some of which, again, at very, very nice grades. And I think this highlights the potential of further discovery in this region. The shallow dipping conglomerates are pretty characteristic of the main mineralised zone at Mount Olympus, and we've got 1 million ounces there already. So we think that there's pretty good prospectivity in this particular area. Turning very quickly now to our lithium projects, they're at a rather formative stage. And look, you know, there are plenty of other companies that have already talked about the lithium thematic, the battery thematic, so I won't really say much about that now. You're pretty much fully aware of that. In terms of the projects, East Pilbara, Kalamazoo, we've got 2 main project areas, Doms Hill to the northwest of Marble Bar, and our Marble Bar tenement package itself immediately to the east of town. Both projects are 100% owned by Kalamazoo, and Global Lithium actually hold some of the ground to our immediate north, and they've of course got their 10.5 million tonne Archer deposit immediately north of our tenement package. Both these packages are also prospective for gold, and we've already completed a 4,600 soil sample program at Doms Hill. The results of that program are currently being finalised and evaluated, and we hope to say something more about that in the coming weeks. Similarly, a 3,800 sample soil program is now underway at Marble Bar, and we hope to have results from that program sometime in January or February. This slide really shows the magnetics and locations of the regions, the major lithium deposits, and note the similarity in the geology and the structure at Doms Hill and that of Pilgangoora to our southwest. I'm not saying that we've got Pilgangoora, but nevertheless, there's potential at Doms Hill to host a significant deposit there. And note the white outlines that denote the Goldilocks zone, that region that sits adjacent to the granitoids, where, you know, obviously the source of the lithium seasoned tantalum fluids that form these economic pegmatites. So Kalamazoo intends to drill an initial 5,000 metres across several interesting targets during the first half of 2022, both at Doms Hill and Marble Bar. And quickly, our sisters project, we've identified several targets there which we need to test next year. That again is a long strike from the De Grey deposits. The Waller Shear goes straight the way through the tenement package there, and the Wattle Plains anomaly to the northeast within that tenement is probably the most serious anomaly that we have there at the moment. Just turning very quickly to Victoria, we focused our acquisition strategy in the Bendigo zone and specifically south of the line that sort of denotes the Murray Basin sedimentary cover that occupies much of the northern part of Victoria. Our Castlemaine and South Muckerford gold projects lie reasonably close to Fosterville, and we've chosen that structural setting with the mineralisation in that region dominated by these and hosted in the hanging wall of these major north-south striking fault systems. Even though the fields have been known about and exploited for 150 years, our average depth of drilling throughout our projects is only 137 metres, and much of the ELs that we have pegged have hardly had any drilling in them at all. In terms of what we're looking for, we're really looking for 1 million ounces at 10 grams. It's a stretch target, but I think the ground that we have certainly has the potential to host that style of deposit. And we're applying new techniques where we can. Much of this area has not been the subject of modern exploration. So far, we've identified about 10 targets. Whoops, sorry. We've identified about 10 targets in our project areas, and we're working our way through drilling and approvals to provide adequate news flow over the next 12 to 24 months. At Tarnagulla, this is probably the next cab off the rank. It's located to the west of our Muckleford project and to the north of our Muckleford project. It's clearly defined as a linear geochemical anomaly. It's been defined directly to the north and a long strike of the Poverty Reef mine that produced 360,000 ounces at 3 ounces a tonne. And we plan a 2,000 metre drilling program at Tarnagulla to start early in 2022. That's just obviously a peer comparison. We're a little bit too far to the right on that graph for my liking, and I guess it's our team's intention to make us move further to the left through the course of the next year. So really, to sum up, Kalamazoo has got major assets in 2 of the most sought after gold provinces in the world. We're looking to expand our Ashburton project towards 2 million ounces and to demonstrate the value of the sulfide resource whilst we find more oxide. We have an active program already at Doms Hill and Marble Bar lithium tenements, and we're searching for another Fosterville in Victoria. We've got an excellent, tightly held register. We're funded with 6 million in cash, 2 million in Novo shares, and we've got an active program designed for the next 2 years and across the entire portfolio. Thanks very much for your attention. I know that was brief, but if you want more detail, come and visit us at the booth. Thanks.
Metal Hawk is a new West Australian nickel and gold exploration company focused on early stage discoveries. Joining us is Managing Director Will Belbin to talk about their projects and the recent nickel sulfide discovery at the Bearhaven Nickel Project. Take it away, Will.
Thanks, Jerry. It's great to be here to talk you guys through the Metal Hawk story. We're a little company with a lot going on. We've had a bit of a roller coaster ride in the last few months, but there's certainly a lot to look forward to. There's a disclaimer to read at your own leisure. So we're focused on early stage discovery in WA. We have a number of highly prospective gold and nickel projects. Since listing last year, we've provided our shareholders with a lot of news flow and a lot of excitement. We have a strong pipeline of activity, and we're primed to build on some of our excellent results and follow-up targets for a big 2022. So we've got projects in the goldfields and in the Albany-Fraser regions. WA is the best place to be in my opinion. Almost all of our work to date has been in the Kalgoorlie region. But what you'll see in the next 12 months is an increase in activity down south, especially from our joint venture partners who are really starting to ramp up. We have an earn-in agreement with Chalice, who are demerging the Viking Gold project into Falcon Metals, which will be listed in the next few weeks. They're planning to get out to Viking in the early part of next year to start an aggressive RC program. Also, our joint venture partners, Western Areas, are really starting to get things moving. They're currently RC drilling out at Kanowna East, and they've got plans to get down into the southern part of the Fraser Range next year for that first drilling program. And these joint ventures really enable Metal Hawk to focus on sort of two to three projects. The JVs enable us to effectively fund exploration across an expansive portfolio without diluting shareholders. So having a quick look at our setup, we've got a small team, 3 of us on the board. Dave Pennock and myself, we started up the company a few years ago. And before we listed last year, we were pretty fortunate to get Brett Lambert on board. He's a strong believer and brings a wealth of experience to the team. Our friends at New Exco have been involved since day one. They've helped us put together the right mix of projects, in particular Adrian Black there. Now New Exco have been involved in more nickel sulfide discoveries in the last 2 to 3 decades than anyone else. I used to work for those guys down at Forrestania. We did most of the early work for Western Areas. And a lot of, some of these early relationships have helped us get Western Areas on board as a major shareholder and a joint venture partner. We have a tight capital structure, under 55 million shares on issue, and we've got as much money as we had when we listed 12 months ago. So we're in a great position to make more discoveries. And you can see what happens when you do get a big sniff of nickel sulfide. Unfortunately, the market didn't really enjoy the downhole EM results. So our Goldfields project is really our bread and butter. We've drilled over 700 air core holes across these 3 projects in the last 12 months, with several follow-up programs in the pipeline and in the works. We've completed our first RC program at Kanowna East, where we've hit high-grade gold, and we've also made a significant nickel sulfide discovery on our consolidated Bearhaven project. Our JV partners, Western Areas, have completed an extensive aircore program up at Emu Lake, and they're now RC drilling out at Kanowna. They'll be drilling out there till the end of the year, and with plans for a lot more next year. The Bearhaven project, we're about 20 k's east of Kalgoorlie. We've got a seal road that goes all the way to the tenement. We're only 2 k's north of the Blair nickel sulfide mine, which produced over 30,000 nickel tonnes up to about 15 years ago. Previous exploration has focused mainly around the Blair mine and to the south. What we like about Blair is the high tenor nickel in the system. The massive sulfide typically ranging between 7 and 12% nickel. So that's really what we're targeting on this project. We consolidated the project about 4 months ago. We trebled the size of the tenure. We signed a nickel option with Horizon Minerals. And we have now over 90 square k's, which is a good sized project in a bloody great place to be. Only a number of weeks following this option, we made a nickel sulfide discovery about 5 k's north of Blair. So the Commodore discovery is situated under cover of about 30 metres of strongly magnetic gravels and clays. There's virtually no surface expression of this mineralisation. We were testing an end of hole air core anomaly, going 0.5% nickel, had good copper and PGEs. We hit massive sulfide in the second hole of the program, nearly 6% nickel, which was certainly something that sent our share price in the right direction. So the follow-up drilling at Commodore, we had a pretty good start. over 3 meters of 2.3% nickel. And I guess the key here was that the mineralization was continuous. The ultramafic looked good. We had the right rocks. Unfortunately, drilling along strike didn't go to plan, and the downhole EM didn't give us any follow-up targets in the vicinity of the holes drilled. But what this discovery really does for us is confirm our geological model and gives us confidence going forward. And this project really is something that's getting the whole team excited. So this is probably the key slide if you're a geology 101 kind of guy. Previous interpretations around the Blair region were of a nickel dome, similar to that at Kambalda, Widgie-Mooltha sort of thing. Virtually no nickel exploration has been done south of this black line here. We made a discovery in the, if you like, the center of the dome, which has sort of thrown a bit of a spanner in the works for those old models. And for us, it's opened up, or it's confirmed the prospectivity of over 10 Ks of strike on multiple horizons, where we're going to be concentrating our regional exploration. So we'll be hitting this pretty hard with regional drilling. EM. We'll be revisiting Commodore following a detailed sort of structural reinterpretation. So I guess this project here is something that's going to be keeping Metal Hawk busy for years, not months. It's just a project with huge potential. Most of the historical work has been done by only gold explorers, so it's just a great project. Our Kanowna East project was one of our main headlines when we went to do the IPO. We've hit it pretty hard with air core drilling, and we've outlined a couple of broad zones of gold anomalism, high grade gold at the base of a sequence of lake clays and sands. We've only just announced results from the first RC program. We've hit some very high grade gold, 4 meters, 17 grams. We've barely scratched the surface here. We've only drilled average hole depth of just over 100 meters in this program. So we'll be going out with a bigger rig to drill some deeper holes and follow up these results and try and get some more gold in the bedrock. Our joint venture partners, Western Areas, they're currently drilling out on this project at the moment. And I guess this is the main reason, one of the main reasons Western Areas are involved with this project is the 12 K south of one of the highest grade nickel sulfide deposits in the world in Silver Swan. And this project has had very little exploration done on it for nickel, virtually no drilling below 100 meters before the start of this program. In fact, I mean, these are sexy looking high MgO ultramafic rocks, last explored by Lion Ore about 15 years ago, and they certainly didn't do any harm to the prospectivity, sort of hitting high MgO, good looking ultramafics from near surface. So extensive drilling by Western Areas targeting the western margin of this unit with downhole EM to follow. And they've got plans to start diamond drilling early next year on this project. I'll touch on our Norseman gold projects. Both of these tenements were granted during the course of 2021. Drilling at Viking is due to commence in January, February, with Falcon following up some very high grade gold hits in the regolith, 6 meters at 60 grams, 4 at 15, these sort of numbers. There's been no deep drilling on this project. So this will be an exciting time for the company. And we believe that the the Falcon spin out will be a good thing for Metal Hawk shareholders. It'll add a renewed focus with a well-funded group. He'll be really pumping up the story. The Northern East tenement here is just out of town. We'll be working up our exploration plans over the summer and we'll be out there drilling. It's only a couple of k's from some of Pantoro's high-grade open pit gold resources. And that tenement was only granted 3 or 4 months ago. So I guess Metal Hawk shareholders can look forward to drilling across a number of projects. All of our projects will have drilling programs on them next year. We've got half a dozen projects there, so it's quite a lot going on for a little company. And in summary, Metal Hawk shareholders are greatly leveraged to exploration success across a number of highly prospective projects in WA. Our joint venture partners and partnerships are a testament to the quality of our projects and our team. And we feel that with our capital structure, we are in a great position to capitalise on exploration success. So there's a bit more to be spoken about. If you want to come and ask us about some of our other projects, and come over to our booth and catch up with us then. Thanks.
And Will is offering free admission to the booth. We now welcome Jonathan Lee, MD of OZZ Resources, which is exploring mainly for gold around the Kew, Meekatharra and Leonora areas of Western Australia. Welcome, Jonathan.
Thank you. I was listed about 5 months ago, so I've been to boards for that period of time. We started putting the company together and the project together last year, and our aim overall was to focus on gold, focus on areas that were in the shadow of an operating plant or mills, and also on major structures. And we ended up putting together about we did put together 5 projects in the original IPO, and we picked up another one, which we announced last week at Pinnacle Well. They all fit the criteria. And during the process of doing it, it was quite obvious that owing to the iron ore booms and the other focuses in the last few years, that a lot of these projects hadn't had much work done on them for about 20 years. So it's very encouraging that there are highly prospective areas in Western Australia still up for grabs. And I know other companies have got them as well. But it gives us a lot of hope that we can be successful in our exploration. Since we listed, we've been fairly busy. We completed drilling our first drill campaign at Maguire's and got a maiden resource there, which I'll talk about. We've already also done aeromagnetics over 3 of the targets, and currently are finished soil sampling 1, and are in the process of doing another one as we speak. I guess that's fairly self-explanatory. Our aim is to add to shareholder value by rapidly exploring and turning over our portfolio as necessary. As I said, we've got 6 projects at the moment, and we'll be looking at actively acquiring more. And if any of the projects don't work out, we'll move on. Sorry? Okay. The 3 of our projects in the Kew Meekatharra area, you can, as I said, we're targeting major structures. The Big Bell Fault runs through, or splays off the Big Bell Fault, runs through 3 of those projects, which are Maguire's, Rabbit Bore and Wadabi South. I'll talk about each of those. At Maguire's, we finished a 4,000 metre drill campaign a few months ago. They're the yellow dots you can see on the right-hand side of the screen. We subsequently released our maiden resource a few weeks ago, which is about 20,000 ounces. You can see some of the intercepts there. This area was drilled initially back in the 80s and early 90s on the old prospect structure. Further west, you can see the Maguire's Reward structure, which has had basically no drilling on it. The best intercept there is 4 metres at 19 from one of 4 holes drilled back again in the 1990s. And so the area has considerable potential. That's a cross section of Maguire's of old prospect. You can see the typical sort of grades down hole, and there are some hanging wall structures as well. It dips steeply to the west and plunges to the north. Old Prospect North and South are 2 separate ore bodies separated by about 200 metres, and that area has been poorly tested. And also further north, along the north of Old Prospect North, is another couple hundred metres of untested ground before we run out of tenement. Similarly, there's about 1 kilometre on the Maguire's Reward structure. So there's considerable potential there to increase the maiden resource of 20,000 ounces up to something substantially larger. Rabbit Bore, which is about 20 kilometres to the northeast of Maguire's, is a greenstone belt surrounded by granite. The greenstone's about 5 kilometres long. It's got significant structural preparation with the extension of the Big Bell Fault running through it. It's had no drilling on the tenement. A lot of the tenement's undercover. There has been geochemistry done over it, and that's shown anomalous, apart from gold in places, nickel and chrome and cobalt as well. So it's a multi-commodity project. We ran aeromagnetics over it recently, in the red ovals there are the anomalies defined by the geophysicists. So we have some targets there. We completed soil sampling there last month, and we're still waiting for the results. But I would expect those to come back, and on the basis of that, we'll be looking at drilling this in the first half of 2022. Definitely got potential. Also, there's, with the nickel potential down to the south under the RB1 and RB2, we might be looking at doing some ground EM there as well to further define targets as well. Further north, about 70 kilometres west of Meeka, is Wadabi South. Again, it's 2 or 3 kilometres of strike of untested lithologies. It's again undercover, so nothing sticks out of the ground too much. There are a couple of projects, old prospects on the area, like Wadabi South, and the ones up to the northwest there. We'll be doing ground soil sampling there in early next year, and we've recently completed the aeromag, and you can see again the anomalies identified by the geophysicists, largely in flexures in the lithological contacts, and also where there's structural complication. So I think this will be something we'll drill later next year, but it's definitely got potential. And as I said, there's been no drilling on this at all, and being undercover, it's an open book. A bit further west, about 100 kilometres from Geraldton, is the Peter Wangi project. It's sort of interesting for a number of reasons. It sits on the Kulanuka Fault, which is a major fault which separates the southwest terrain and the UME terrain of in the Yilgarn Craton. So it's a major structure. There's a 3 kilometre long greenstone belt, which has never been drilled, and it's had virtually no work on it. It was the site of Western Australia's first gold rush in 1868, and we're hopefully before the end of December, we'll be completing soil sampling over that, and then looking at drilling it next year. Again, the geophysicists has identified a number of targets there. It's not surprisingly one of the ones is over the greenstone, and there's a couple on the Kulanuka Fault as well. The pale yellow bits are laterite cover, and part of the reason the old timers left alone and moved on was the There was high water table, and despite the number of shafts over the area, it's never been drilled, and it's been left alone largely for the last 100 years. So it'll be interesting to see what comes up there. It could be something significant. Our two remaining projects are in Leonora, just north of Leonora, about 20 k's north. Pinnacle Well we acquired last week, as I announced. Mount Davis was one of the initial projects we floated on. There is obviously very prospective. It sits on some major structure like the Mount George Shear and the Keith-Kilkenny Shear Zone. It's got a great address. We're quite close to King of the Hills and the other significant deposits in the area, and we'll be actively exploring those in coming months as well. At Mount Davis, where at the moment the guys are out there doing soil sampling, so we'll be getting those results back, I imagine, in January. We've done geophysical interpretation, as you can see from the red circles, and on the basis of that, we'll be looking at defining drill targets. The Mount George Shear, which runs down the eastern side of the tenements, is at the north, has a project called Trig, which was drilled in the 90s. It's got about a 10,000 ounce resource on it, which is non-JORC, but we will be, we've got about 4.5 kilometres of that structure to the south with not a drill hole on it, and we'll be looking at drill testing that in coming months. And also a bit further to the west is the Clifford Fault, which again has mineralisation associated with it. It's high grade in places, and we'll be looking at, subject to the geochemistry, looking at selectively drilling parts of that as well. So we should be getting some interesting results out of that in coming months. The Trevor Bore thing, which is just off our project, which is just off our lease to the southwest, was a recent announcement discovery of St Barbara. Pinnacle Well. So we announced this last week. It's about 100 square kilometres, so it's a substantial lease. We picked it up from a prospector who had owned it for 5 years, and when I say prospector, who's a geologist who's semi-retired. He'd spent a lot of time collating the data, ground truthing, mapping, and he's come up with this plan you can see there. The orangey colour are the interpreted quartz veins. I'll say that 70% of this lease is undercover, which might be 10 to 20 to 30 metres deep. So there is interpretation in this, but nevertheless, he's collated a lot of the information, or most of it, and it gives us a great launching pad to start drilling next year. Most of the outcrop is in the northern part of the tenement, where the granite is exposed. And as you can see, the veining and the interpretation and the sampling drops off south of that. It's got, again, great structural preparation with the Keith-Kilkenny running through parts of it and the Pigwell Graben. And apart from the gold potential, it has base metal potential as well. Jaguar and Bentley are about 25 kilometres to the north, and those structures running up to the northwest. There are several gossans on the lease which stick out of the ground and have a substantial strike length, which do have base metal anomalism, and we'll be looking at probably drilling those fairly early on because they're obvious targets and they've had virtually no drilling to date. Also around Pinnacle Well, there's a huge alteration system of pyrophyllite, which is a talc mineral, is sometimes associated with VMS alteration. Also in that area, there's an old costine with copper minerals in it, which dates from the 60s and it's not recorded anywhere. And also some of the wide space geochemistry has gold anomalies in there as well. So it could be something. It's undercover, we don't know, and we'll be looking at, once we've collated all the geophysics, possibly done some more, we'll be looking at defining the drill targets and getting in there and doing it quite quickly. It was a very exciting project. Key takeaways. One of the slides were missing before, so I didn't show it, but our capital structure is fairly tight. We have about 47 million shares on issue. We have an enterprise value of about $3 million. And so we're highly leveraged to any success at all. So in the next six months, certainly, and beyond that, we'll be looking at doing intensive drill campaigns at least 3 of our targets and possibly 5 of them, or our projects, over the next 3 to 9 months of the next year. So we'll be, I'm sure, producing good results. The work we've done to date since we listed has laid the groundwork for that drilling. So we've been active already in terms of, as I said, geophysics and soil sampling and mapping of the tenements and understanding the geology. So we're in a great position now to leverage off that. And I think there's a golden upside for our shareholders because of that. If we get any success at all, that our share price could go well north of where it is now. That's it. Thank you all.
Thank you, Jonathan. Recently, ASX-listed Dundas Minerals has secured a 1,200 square kilometre tenement position in the highly prospective Southern Albany Fraser Origin. Commencing its maiden drilling program early next week, the company's exciting nickel and gold exploration journey is well underway. To discuss the project, we're joined by Managing Director Shane Volk.
Wow, an exciting day for Dundas Minerals as we list on the ASX here in Perth. And we're on. Future will have a drilling program that will commence before the end of this calendar year, which is quite exciting. Strong news flow coming from that. We've also completed some geophysics in the area, and that'll again be very interesting to see the results of that when it comes. It's going to be an exciting journey. There'll be the ups and the downs, but initially it's about our maiden drilling program where we'll be testing the Jumbuck nickel prospect and then moving on after that towards the Kokoda gold prospect. Now we're just finalising the arrangements for drilling at the moment, and as soon as that's done, we'll make an announcement about the timing and the extent of that program. Thank you to our shareholders. We look forward to a wonderful journey. Right, so that was the 10th of November, only 3 weeks ago. So the culmination of 18 months of hard work. Anyone that's listed a company on the ASX will appreciate that. And also early vindication for our seed capital shareholders that certainly backed us and the ground position and also getting Dundas to market. Look, a very short slide on the battery materials thematic, and you've all seen other slides on this morning. This is very similar to the slide that Eddie showed this morning. On the left, we see the forecast growth in battery materials demand out to 2030. And on the right, a chart that shows the primary driver behind this demand, which of course is energy storage, renewables energy, lithium-ion batteries. And really it's about the decarbonisation of the global economy. The actual numbers are interesting, but I think the takeaway is the trend. You look at the 2021 sort of size of the bar for battery materials demand, and it's about sort of 20% of what it's going to look like in 2030. So that's a potential growth, and therein lies the opportunities for us in the resources sector. Some familiar faces on this slide: Jeff Bezos, Bill Gates, Elon Musk. What's interesting and what came to light a few months ago was that Bezos and Gates had backed a US company, Cobalt Metals. And Cobalt Metals is on a global search for battery materials. And it's certainly not the type of investment that you'd typically associate with these tech entrepreneurs. And I think what it does is it really validates what's going to happen for commodities such as nickel and copper in the future demand for those. These gentlemen are all about making money, and they're renowned for getting in at the head of the curve. And I think this is what they're doing in the case of battery materials. The quote down the bottom is an interesting one, but below the photograph that was made by Elon Musk some 12 months ago, where he urged us miners, or the miners, to produce more nickel, mine more nickel. Now, if it was only as easy as that, if it was only as easy as turning the knob or switching the light bulb on and starting to mine more nickel, we all know that that every ore body has a finite life, and to increase nickel production, you have to go and find new resources and bring them on stream. And that's exactly what we intend to do at Dundas Minerals. We've managed to secure a large ground position in the southern Albany Fraser, south of the nature reserve, which is in green there. And those of us that are familiar with the Albany Fraser, it runs from the Great Victoria Desert, sort of east of Laverton in an arc, all the way down to Albany in southern Western Australia. The home to two great mineral discoveries, the Tropicana gold mine up to the north, and also the Nova Bollinger nickel deposit more towards the Norseman area. The area remains highly prospective even today. It's being heavily worked, but more so around the existing mines. Down to the area we are, there's been very little recent exploration, and we all know that the big, great discoveries are made in the underexplored areas, and we've managed to secure 1,200 square kilometres in that area. Looking a little closer at our tenements, we have 12 contiguous licences. They're all 100% owned by us. They've all been pegged cleanly. They're all on unallocated Crown land. We have no competing landholders, so we have free access to the land. And what's really interesting is all of the previous exploration in this area was all conducted before the Nova nickel mine was discovered, and it was all mainly gold focused, and there's been no drilling of any depths at all in the area. I think the deepest drill hole is around 65 metres for the whole property. This is a magnetics image, just zooming in a bit closer. Our tenements are shown in white there. We have some interesting neighbours. We have Rio Tinto directly to our west, who have two very large exploration tenements. Metal Hawk, just presented earlier, they have a position directly to our east, and they're in joint venture with Western Areas. And to the south, we have Mount Ridley. Typical of the Albany Fraser, this area is covered by 5 to 30 metres of cover. Any deposit we're looking for is going to be undercover. As I mentioned, very little deep drilling, or none at all. Most of the drilling is RAB and air core drilling, and the average depth is around 20-25 metres. There's considerable uncertainty, therefore, about what the underlying bedrock is, and that's the opportunity for us. The vegetation, anybody that's been driven across the Nullarbor through Belbin, heavily covered by mallee scrub, that's what we had in the area. We've certainly benefited from large fire events that happened in the Esperance area some 2 years ago. The image on the left is what a satellite image before the fires, and on the right, you can see most of that green vegetation has gone. So whereas previous explorers have certainly hindered somewhat in terms of moving around the area, we've benefited from that event. So we all know in the Albany Fraser, the next big one is definitely going to be undercover, and the challenges of working undercover are well known in the area. I mean, you can go onto the Department of Mines website, and there's field manuals and describing what the challenges are. But the real tools to finding these things undercover is the advances that have been made in geophysics and in computer processing in the last 10 to 15 years. And something like the Julimar discovery by Chalice certainly shows what can be done with these advanced geophysics survey tools and the right sort of interpretation and software. So how far undercover? I thought it might be useful just to look at the two big deposits that are already in the Albany Fraser. So Tropicana, which was discovered around 2005, that's around 40 metres of cover at the top, down to 100 metres, and the ore body extends down to a couple of 100 metres. But the most recent discovery, Nova Bollinger, that sits considerably deeper, and this is perhaps what we're looking for in our tenements. 160 metres of cover. The discovery drill hole was around 180 metres from memory. The QV1 building there is just to give a bit of scale, and this deposit extends well beyond 400 metres below the surface. So that's perhaps what we're looking for. So how do you go about it? The first thing is we've done at Dundas the project scale data sets. So we've flown SkyTem electromagnetic survey across the whole northern tenement area, the area that's been most prospective for nickel. The electromagnetic surveys will highlight those areas of conductivity at depth. We've done the first ever detailed gravity survey across the entire tenement. So the entire 1,200 square kilometres is now covered by gravity surveys on 1 kilometre lines and 500 metre spacings. So this cartoon really sort of summarises what we're looking for with these data sets. We're looking for coincidental anomalies between the electromagnetics, the magnetics and the gravity, and we're already starting to see these anomalies in our tenement package, and I'll take you through the areas that we've already highlighted for highly prospective areas where we're going to do another layer of detailed work. Just as a bit of background, this is the gravity that everybody else was looking at before we did our detailed survey. It's a very coarse gravity image. It's a hodgepodge of data that was put together, more than 20 years ago. This is what previous explorers had to use. This is what it looks like now after we've completed our survey. You can see much more definition, and you can certainly see areas of very dense rocks in the dark reds and the mauves and the pinks. And this combined with the EM and the magnetics is driving us to high priority areas. The survey, 8 weeks of work, 4,000 stations, and certainly was never possible before the bushfire events. The fires have allowed us to move through the area with much greater ease. The EM survey, the image on the left just shows the area that we covered with this survey. On the right is the first slice of the EM data, again showing very large areas of conductivity. To the right of the screen, or to the northwest, that's an area of salinity of salt lakes. So they're probably, salt's a very good conductor, as we know. So that's probably more indicative of the lakes. But what the real area of interest is what we call a northeast project area, which is up to the left of the screen, the top left-hand corner. And you can see a northwest heading structure in the very dark red. That's an area that is of extreme interest. And we did not have the tenement to the due north of that until yesterday. We pegged that. We announced the pegging of that yesterday. We applied for that on Monday. So we've now got the full extent of that EM anomaly that heads north. This is the channel 40. Any of the geophysicists or technical guys, this is the channel 40 data, which is, as Steve Massey, our geophysicist, says, these are sort of the slow burning embers, the latest responses and the residual conductivity. And you can see very clearly up in the northwest that conductor does show quite distinctly in this channel 40. So we're quite excited to get in and do some work up there. These are the 4 high priority areas where we have coincidental electromagnetics, coincidental gravity and coincidental magnetics. What's exciting is that the Jumbuck area, which we're going to commence drilling on next week, that has come up as a priority area, as has terra firma next to it, the northeast project area. And another area that we're very excited about is Matilda South. That's highlighted in red at the bottom. And we're going to move into those areas and do much more detailed work as soon as we can. It's now about more precise target definition in these areas, and that involves very close space gravity. We're going to do 250 metre lines and 100 metre stations across those 4 areas. Airborne magnetics, 100 metre line spacing on the airborne mag, that's been organised, and we'll get in and do some ground EM where we find very good conductive responses. So that works getting organised, and some of it will start before the end of this year. The rest of it will be in the first quarter of next year. But drill testing is what it's all about. And our first inaugural drilling program is lined up to start towards the end of next week. And we'll be drilling some projects that we've identified from historical data. They've only ever been drilled to 20 odd metres in depth, and where for the first time we're planning to drill these projects at depth. So the first one is the Jumbuck nickel prospect. Again, this is all pre-Nova discovery, pre-2012. An interesting RAB hole, 2 metres at 0.5% nickel at the bottom of the hole, surrounded by numerous other holes that are anomalous in sulphur. We've got 15 holes initially planned here, up to 150 metres in depth to test the extent of that anomaly. There's an EM conductor just to the south of it, and that showed up in our recent VTEM survey, as well as being showed up in previous historic EM survey that was done in the area. The Kokoda gold prospect is very similar, only drilled to a very shallow depth. So we'll be putting some holes in there again, getting down to 150 metres to test that prospect. Next year, we have some prospects that are associated with tenements that haven't been granted yet. The grant should come out in February and March. They're in Section 29 at the moment. The Terra Firma project is a gold anomaly from way back in 1995 when the gold price was around $300 an ounce. 4 metres at a gram a tonne at the bottom of the hole, probably not economic in those days. There's never been any follow-up work. This hole was not on the GSWA digital website. It was found by Mike Northcote, our exploration manager, trolling through some old exploration reports and hard copy reports, and bang, came across this anomaly, this drill hole, and we immediately pegged the area, and we were drilling that hopefully in 2022, along with the Mulga prospect, which is very similar to Kokoda. It's been shallow drilled gold anomaly, and we look forward to getting into that. But it's Matilda South that we'll be doing immediate gravity later this year, and we'll be planning some drill holes to test that anomaly next year. So we have a fairly rich pipeline of activity and news flow, drilling, close space geophysical work, and then drill results, and then planning our programs for 2022. A small team, but very busy. And as we all know, working in junior companies, the advantage of working in small teams is you can make nimble and quick decisions. There's no bureaucracy, and we're certainly getting out and about, and we're doing what our shareholders expect, and we're exploring with vigour. So just to finish off, it'd be wonderful to join us in the search, become part of the discovery of Dundas Minerals. We really believe we're in an area that's amenable to the next big discovery in the Albany Fraser. So it'd be wonderful if you join us as a shareholder of Dundas. So thank you very much. And there's the competent person statement.
Thank you, Shane, who took bell ringing lessons before the event at the ASX. Forrestania Resources was formed around the consolidation and acquisition of key tenements across 3 prolific and highly prospective mineral provinces in WA. Now exploring its namesake project for lithium, gold and nickel, Director John Hannaford is here to discuss the company's next steps. Welcome, John.
Thank you, Jerry. Thank you, everybody, for the opportunity to speak today. It's been quite a journey this year. We listed in September after a fairly short period of fast-track IPO, which I'll get to shortly, but really appreciate the opportunity to speak today. I think it's a fantastic initiative, this conference, and a good opportunity for the smaller companies, more recent entrants to the market, to have their say. Firstly, a quick acknowledgement of country. We are very respectful of the land that we are operating in, and as explorers, we are certainly we leave a footprint on the land, and we're respectful for the opportunity to actually participate alongside the traditional owners. Disclaimer as usual. A bit of background on this slide as to what we are and how we got to this position. David Izzard and myself set about looking for high quality, high impact projects several years ago, and we established, we looked at what has the potential to host a major discovery, and so we look for areas in prolific mining jurisdictions. We look for areas with substantial scope for a major discovery, and the first project areas we looked at and we secured were in Leonora, where we've joint ventured with 2 guys who become part of our team, and they were looking for granite hosted gold projects. And secondly, we had secured some ground around Southern Cross along a major granite greenstone contact. Both of those project areas are still predominantly applications, so we were still on the search for our major, more advanced project. Late last year, we were offered the opportunity to have a look at Firefly's Forrestania project, and that for us was a unique opportunity in a very competitive landscape to secure such a large but well-endowed project in a major province. So we secured that with an option. As I said, it was fairly fast track. Firefly, as you may know, was in a scheme of arrangement this year with Gascoyne, which became a hostile situation, and we were in the background trying to complete our deal and get the job done. So congratulations to my team who are who are here mostly today, but it's a fantastic effort. But now we find ourselves with a wealth of opportunity to really get into this package and to see if we can find another major deposit. So the Forrestania project is our key project. As I said, it's a rare consolidation of major tenure. It has, I suppose, a rare distinction of being a host to three major commodities in major mines, being lithium, gold, and nickel, which we'll get to shortly. A quick corporate overview. Recently, 34 cents. We listed at 20 cents at the end of September. The 51 million shares on issue, so we're fairly tightly held. The top 20 have 68%. That's made up of high net worth, plus a board and management, and Firefly as a 12% shareholder. Currently got $4 million in the bank and a market cap of 17.4 million. So that gives us some fantastic opportunity on the back of some exploration success to really give shareholders a lift and create some value. The board and management team, we're a tight team made up of people who really started the company. Myself and David Izzard. Billy Higgins is a technical non-exec. He's currently exploration manager with Capricorn. It's a wealth of experience in gold and particularly in the discovery of granite-hosted gold deposits. Ashley Bennett is his partner in the Leonora project. Simon Adams, the company secretary. We've also got some other technical expertise that I'll get to shortly that's helping us get into the lithium. We're very conscious of the world we live in and the market that we operated in, and our company values and ESG, I think, are really important to us and to shareholders as we aim to develop our way in the world. We're focusing on ESG is very important to us, and being a miner within environmentally sensitive areas, it's really important that we put them in the forefront of all our activities. The Forrestania project, I'll spend a fair bit of time here just to get appreciation of what we have and what the opportunity we have here. It's a consolidation of 100 k's of strike length along a major ultramafic belt. Historically, the belt was nickel, and Western areas have been there for decades, and they've got some major nickel mines. There's also the Bounty gold mine in the north, which was a 1 million ounce producer, went down to about 900 meters underground. And more recently, we have the Earl Grey deposit that Kidman discovered and Wesfarmers subsequently acquired. And that's, I think, gives you a really rich and complex set of structures that we're trying to work through. There's literally gold with lithium with nickel in the same small project areas. So trying to focus on one or the other is really a challenge. And I think from our point of view, we approached this initially looking at what had been developed in the gold space, and more recently now we're getting into the database of predominantly lithium exploration that Firefly and others have done, and what we're seeing now as we go forward is that sort of developing that knowledge of what was done and where the targets still lie. So just to put this in, that's the Earl Grey in the top there. Our tenure runs north-south. We've secured these other areas to the east subsequently. The major advanced lithium prospect there is the giant pegmatite where Firefly recorded 33 meters at 3.2% lithium and followed that up with another lithium intercept. That's the major advanced project which we'll be focusing on in our first drilling campaign for lithium early in the new year. That project also has a gold prospect there as well as nickel. Going further south with the Lady Leela project just out to the east here, that was a separate acquisition. We bought that because we believe it's one of those projects just been left overlooked by others. It's originally a WMC discovery drilled in 1999. There was a resource estimate in 2016. However, no drilling for the last 20 odd years. It's, we believe, a bounty lookalike potentially, only been drilled shallow depths, and there's a 24,000 ounce resource there, which we're following up. We've just drilled our first program there last month, and looking forward to results in the next couple of weeks. Going further south, we have the Crossroads project, which is crossroads up from the crossroad between east and west roads that access the nickel mines. There's some historic drilling there, never been much done below the shallow depths, and again hasn't had the proper work. So we're doing further work over that with some geophysics at the moment. Oops. Great Southern, that's a granite hosted gold mine, and mined in the 1920s, and then more recently by a farmer. Nothing's been done there. There's a significant granite hosted potential area around it that hasn't really been touched at all. We secured just recently this small project here, which has got the Black Prince gold prospect, and then another application around here. So that'll be the focus of a lot of work into the new year. As we go further south, the nickel mines on the western side of the ultramafic belt from western areas, we've got their ground immediately to the east. Nothing's really been done on that apart from some very cursory exploration from Firefly. There's also some further lithium opportunities to the south. South Iron Cap, which was drilled by Western Areas, and they actually didn't drill for lithium. Western Areas are very focused on nickel, but they have gone through their old database and re-assayed where they had discovered a pegmatite in their nickel drilling. So it's not optimized for lithium. They've got a significant intercept there, which we believe from our targeting does continue onto our ground. And then there's some gold deposits to the south. That's Classic Mines, Classic Resources Gap project, where they've got 93,000 ounces and some significant high-grade hits recently. We've got a similarly hosted project just here, calling Kit Kat, which has 10 Ks in strike on that belt, has never really been drilled properly. And some further gold from Western Areas to the south. So as you can see, there's a lot going on, and we are really, I suppose, overwhelmed to some extent, because there's obviously a lot of good lithium projects there and prospects to look at, but a lot of good gold projects as well. So there's, in terms of infrastructure, there's major mines here in the north. That road goes up to Southern Cross. It's a major road going from Hyden, which is about 50 k's east, through to Norseman, and this road services all of the prospects in north-south. So we're very, very well serviced there, and there's camps available for our team to stay in. So we're lucky from that perspective. Moving on to our most advanced lithium prospect. This is the GEM project. As I mentioned, there's the major intercept that's been recorded at 33 metres at 3% lithium. That was followed up with a conclusion by Firefly at the time that they thought they had closed off the mineralisation. But you know, with a new set of eyes and the benefit of some hindsight and looking at the orientations of other pegmatites in the area, we believe that there's significant opportunity to step out with another drilling campaign, and we think if we can replicate that hole, then there's a significant upside for shareholders. It's a major lithium hit in anyone's language, and in a province like this where you're near major mines, we think it's very significant. The area has got a number of different prospects in it, and we'll be looking to get into those in the new year. We've done some sampling, which we're just still waiting for results, and we're going through environmental and mines department approvals for that drilling program. There's also some gold and some nickel towards the south down here. And as well, just off, there's a nickel result from Western Areas, which hasn't really been followed up on the tenement. So again, very complex, but we can get opportunity to test lithium and nickel and gold with one program. It's a bit more on this that we discovered that on that project, the ultramafic contact was present. Again, that hasn't been followed off. There's some significant gold from back in the 80s, which hasn't been properly tested, which we'll try and follow up as well. One thing I wanted to look at, and conscious of time, but we've just been assessing some of the lithium prospective areas, what we call Bounty East, which is up in the north, just east of the Bounty and Earl Grey mines. And in particular, we've been looking at what results were recorded for Forrestania in the context of what the major mines look like. And the Earl Grey deposit is characterised by not much grade in the top 60, 70 metres. And that's significant because a lot of the drilling that was done by Firefly on our Bounty East area didn't record any lithium in the top 60 or 70 metres. The drilling was shallow. However, we're going through the database literally as we speak. A lot of the drilling did record structures that have this sort of, this sort of orientation, and a lot of the other pathfinder elements like cesium, beryllium, tantalum were all present. And so we're just formulating some targets to look to drill. But that's significant from our perspective because this is, again, similar to Bounty, where there was a lot of the lithium had weathered out of the shallower zones. And so we think going back to some of these areas which have been maybe drilled to a shallow horizon, but with a much deeper drill program as a way of just testing this theory is definitely worth pursuing, given that we are a small number of, we're out in this area here, just out to the east of the Bounty and Earl Grey mines. So that's something we've engaged Lee Betternay, who was the expert consultant who consulted to Firefly when they designed this campaign. And he has now come back to the company, or come back to the prospect, and giving us some advice as to, in the context of what he had presented to them as their program, this is where we should be drilling. So we're really excited about that, and hopefully see some more news on that in the new year. I've left it pretty short, but the key takeaways that I'll get through to the key takeaways for the new year program. We're very active. We'll be drilling at Gem. We'll be doing further work on Bounty East. We'll be getting results from Lady Leila's gold, and then doing more geochemistry and geophysics with drilling after that. Thank you for your attention. We look forward to seeing you out in the booth.
Thank you, John. As we go to lunch, don't forget to scan the QR balls directly in front of you. You have a chance of winning a fantastic 35-litre Yeti Esky filled with selected Spinifex Brewing Company beers. It'll be on stage after the next session. All right, go thee forth to lunch.